Hello everybody, it's Thursday. I know it's not my Friday typical update, but Fridays are going to be a little bit tricky for me moving forward, so I'm going to be doing my video updates on Thursday when I can. Alright, so I have a lot to talk to you about today. I've increased my account profit by a lot, 106% overall. I'm now an official member of the5ers.com, which is a prop trading firm. With the $550 one-time commitment, with a profit target of $910 on a 13,000 qualifying live account. So if I do well and I hit that profit target, I get a $52,000 account to trade. Sorry if you hear my cats in the background. I guess they're kind of grumpy with each other. And then I also want to talk about the individual trades that got me to that point on my account of over 100% profit. So those trades were hit and miss. I made some really bad decisions and also some really good ones. And then what happened with the flash crash on the Aussie and the yen, where the Australian yen went over 500 pips, almost over 600 pips within a few moments. So I'm going to hit on that as well during the course of this video. So let's get started and let's talk about my first trades of the week and why I took them. They were not good. The idea was to enter on the trend, knowing that this December was a big month for trends on pretty much all pairs. Um, I entered right here near the peak. Now it wasn't really too close to a round number, but it was still pretty close to 1.75, which is kind of a mistake on my part. And you can see that this trade went against me pretty quickly, only a couple hours after. It did move into some profit, but you can see where my profit is marked right here at the top, so it didn't really get very close. And then it went against me pretty fast. And you can see this nice rejection candle. And I was looking at that and I saw, but I was thinking, well, the rejection candles haven't really worked out for me that well in December. I've had some good trades and some bad, and been managed to come out with some profit. But here I entered again, and this time I was, I believe, on the 15-minute time frame, thinking that that would be probably a good place to enter another trade. Actually, I don't even think it was on the 15-minute time frame. I have no idea why I entered a second position at this point, thinking that it would jump. There was no really big indication or reason. So who knows? Maybe I got emotional in this area. Luckily, the risk wasn't too bad, but I still didn't like the trade, especially after receiving this rejection candle. It made me question a lot of my trades on these two trades and why I actually took them. And then after this candle took place, I just kept holding on to it, thinking, well, maybe it's going to bounce because these candles haven't been working out too well for this month, and December has been known to continue trending up. It was all just hopes. So I kept thinking about it, thinking about it. The new week opened, entry right here. This is a new candle for the new week. And I kept holding on to it. And I saw that there was a dip in price, so there was a gap, thinking, okay, well, likely there's going to be a gap recovery, and to get me out at a little bit better price, I waited a little bit for that gap, exited my position, and then went short. So why did I go short? I kept thinking about this candle. This candle was just too good of a rejection candle. The high of the previous candle was broken. The body of the candle was also lower than the entry and the lowest point of the previous candle. It just didn't really make sense for me to hold these two buy positions, and so that's why I exited them when I did. Enter the short. Now this was a bit late of an entry because typically I should have been entered right on the opening of this candle right here. So it was a bit late of an entry, but I did take a smaller profit. And this was a decently medium to higher risk trade. I did have a stop loss on it, was right up here. And the take profit level was hit, and it was hit pretty quickly, almost no drawdown on that trade. And it did come out with a good amount of profit on that position of $654 on that particular trade. Okay, so that was one of the bigger ones on this account. But assessing, looking at the new week, I thought this was a really good opportunity and ended up being one. All right, so let's talk about my other problem trade. This was another one that was taken off of a new indicator that I've been looking at, and that's a mistake right there. Why start utilizing a new indicator only 24 hours after using it? Mistake number one. So saw this happen here. And this indicator is pretty cool. I mean, it shows me the support resistance of all the previous days. I have many days I want, but I don't really know what the support resistance is based off of, and still need to do more assessment on this actual indicator itself. But looked at the previous days and thought that, okay, well, if I enter on the support level 2 and 3, then I have a pretty good chance of this having some recovery. Well, the Euro US dollar had huge, massive push on the beginning of the week down, and since has recovered, but entered on support level 2 and 3, and then entered on a third position. And this third position was a good decision. These were bad decisions because I don't know this indicator. Don't know this indicator I'm using, and I'm not going to be using it anytime soon until I do more evaluation on it. Okay, but this candle was an actual entry because of the good engulfing reversal candle, rejection candle here. So push down, new low was made, barely new low was made, new high, body of the candle was strong from the previous candle, good entry from there, good in an entry on the next candle after waiting for this candle to close. So signal candle closed, entry on the next candle, and it did push down even more. Now, a little bit scary on this trade because this was when the flash crash was happening during these two candles. So if you don't are not aware, if anybody's trading the market yesterday, they'll know about the flash crash that happened. Um, and it was mostly, as far as we know, we don't have a lot of information on what actually happened. Most people think it was because of the Japanese yen, and that the Australian dollar was targeted on most pairs because of it. Um, but they're also thinking because at the time that the flash crash happened, which was on the turnover of the next day, so yesterday, there wasn't a lot of liquidity in the market. The spreads were really high, at least on the retail market. Um, and well, actually, there was a lot of liquidity happening during that time, and a lot of volume too. It was pretty nuts what was happening in such a fast amount of time, and it was affecting most pairs. But the Australian dollar and Japanese yen were the ones that were affected the most. So luckily, I didn't have too big of an issue on the Euro US dollar, but it did break the low, which is typically where my stop loss is. I held on to it because of knowing that when flash crashes happen like this, that in most cases they're recovered. So right here, bam, jump back up. This happened on the pound US dollar back in 2016, where it went down and up in a matter of minutes. And so this happened also on the Aussie dollar as well, down and in a complete recovery of that happening. So I'm knowing that there was a good likelihood of that happening. I decided to hold on to my positions. My initial stop loss was down here for all of these trades because I didn't like my setup here. I didn't like why I chose these trades because of, like I mentioned, the new indicator that I was using. So what happened after the flash crash? Let's go to the 4-hour. 4-hour chart. This candle, special candle right here. Same kind of thing that I was talking to you about on the 1-hour chart, where we have a rejection. So push up, rejection candle. Really good entry on that one. I didn't see this one. I actually missed it for the start of the week. I might not even put these trades in if I would have saw that. But new high, new low, body of the candle, all larger than the previous candle. Okay. Same thing here. New low, new high, break of the previous candle. Body of the candle is even higher than the previous open. Really good entry. No reason for me to close out these trades once this candle happened. Decided to use this as a support level. So my stop losses were down here for all these trades. Stop losses were down. My headphones turning off. And waited to see what happened. You can see pretty clear what happened at that point. Market moved up and had a little bit of a scare on this candle here where it pushed down. Was watching it pretty closely, thinking that it would whip back up and extend. The news for the day was the PMI for the US dollar, which was negative. That really helped push this into my favor with this candle right here. That was during the news, and that popped things into profit for me, causing me to come out with a 7.27% gain for today. All right, so now let's talk about a little bit more about the 5ers. Since I've gone through the trades that I've taken, which weren't that great for this week. Some good decisions, like this trade here and the pound Canadian dollar, where I closed out these trades and took this one. So bad decisions and good decisions. I was able to come out on the top of all of this, but it was good learning for me not to use new indicators so quickly, to not try to mess with what I already have, because so far what I've been doing with the setups that I've been showing you, they've been going well. Yes, I had some streams of losses in December, but it's just because it's the December month and things are a little bit unpredictable. All right, so 5ers. Uh, I've done a little bit of evaluation. I also looked at uh, the broker that they're using, which is apparently Elite Technology. I'm not even sure if it's Mask or what. I don't see any broker that comes up with Elite. So I don't really know much about that at all, but I guess I'll find out maybe a little bit more as I go. Um, So 5ers mentioned to you guys a couple of weeks ago, they have a 50% profit split. They're a proprietary. My gosh. So yes, they are a proprietary firm. For some reason, that word always gets me. Um, and they have a 50% split for the profits that you make. 10% growth on the account increases your account size by 100%. So if you're trading 52,000, they'll increase your account size. If you hit the 10% profit target, they'll increase your account size to 104,000. So they'll double it. And there's no risk of capital to you, which is pretty great. Um, and it's pretty smart how they do this. So you pay the $550. The drawdown, a max drawdown is 520. So that 550 that I pay them, they also cover in drawdown potential. And so the risk to them is actually almost nothing as well, at least on these qualifying accounts. So once I get a funded account, then they are at risk. But they know I can trade if I was able to hit that target of $910. So what we look at, the limits of what we go for, or what I have to work with the 5ers, is obviously the target of 910, max drawdown 520, the exposure of 0.65 lots. So that's a little bit unfortunate, but so I can't make huge trades. Profit share of 50%, growth, as I mentioned to you, 10%, 2 times for every 10%. Now I can take trades overnight. I can also hold over the weekend, which a lot of these prop firms don't allow. And I have 6 months to make that $910 profit, and I have to do it in more than 20 days. So it has to be more than 20 days, an active account trading for over 20 days in order for you to uh, get a funded $52,000 account. Um, and so the 1.5% risk per trade. That has to be I have to be very careful with that. That means that my stop loss can't be more than 1.5%. Otherwise, I'll break the rules here, and I'll lose the potential to trade this, even qualify this account. So I don't want to do that. So I have to be very careful and stick to the parameters in order for me to get that funded account. All right, so what's the plan? The plan is going to be to do low risk 0.1 for my trades, medium risk 0.2, and high risk 0.3. So that's going to be my risk profile for my trades, and I'm going to be taking the best trade setups, for example, like the one that I was mentioning right here, if I can find it. So the best trade setups, like this candle here, and an entry on the next candle. And I'm using it hypothetically, but this would be typically my entry candle for a short position on the downside. So I'll be taking the best potential trades and the low, high, and medium risk that I just mentioned will be based on the actual setup itself. Um, and that will be my plan moving forward. All right, so I think that's pretty much my update for today. So we're going to be covering the 5ers in my streams from now on, from here on out. You guys are going to be able to track my performance. And I feel like this is going to be a real testament on how good of a trader I actually am. How well am I going to be able to stick to my rules? Am I going to be able to make profit? Am I going to lose the $528 or my investment that I put into 5ers? Um, and how is this all going to go? I'm also going to continue to trade my my small $2,500 account at Trader's Way, and continue to hopefully mirror the trades on both accounts, um, on 5ers account and on my personal. All right, so things are looking really good for me so far. Some not great trades this week. They did happen to work out for me. Um, and hopefully I can make some better decisions moving forward because it will be very crucial. Thanks, guys, for watching. See you next time.